Hey, what's up guys? John here. Home sales have just hit the lowest point in 30 years.
Home sales around the country sank to a 30-year low last month.
That's the weakest showing since 1995.
The worst housing market in 30 years to be a home seller. Now, at the same time, foreclosures are skyrocketing.
Home foreclosures in the U.S. are on the rise.
The rise of home foreclosures is placing a dark cloud over these top 5 states.
But what Google, Amazon, Citigroup, BlackRock, and some of the most successful and profitable companies in the world, what they're doing right now, early 2024, I mean the first week and a half of January, they're prepping. You have to pay close attention to this because I think it's going to impact every single American. I think it's going to impact every small business owner. I think it's going to have a massive just overall impact on America. I think this is going to be one of the greatest land grabs and wealth transfers we've ever seen since this country was founded in 1776. 250 years, it's a big claim. But the more that you look at this data that I'm going to provide to you, the more that you see that's probably what's going to happen this year. I believe if you position yourself, you're going to put yourself in a really good spot to be able to take advantage of this massive wealth transfer. And if you don't, it's going to take advantage of you. I'm going to break it down. I'm going to give you the facts to help you and position you for this big moment in America. Please hit the like button. Hit the like button. YouTube will share the content, educate more people about what's going on. And if you like to fix your credit, we would love to help you. At my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description. Schedule a free strategy session for Monday. Take a look at this. So, existing home sales tumbled. Lowest level since 1995. It's the worst year for the housing market in nearly 3 decades. At the same time, you have Newsweek reporting that Americans are losing their homes. It says if we see price declines, this could potentially lead to negative equity, and if unemployment rates continue to rise, we may see more and more people not able to make their mortgage payments. Now let's look at what these massive companies, like these extremely profitable companies, Google, Citigroup, BlackRock, Amazon, what they're doing. So they're announcing job cuts, right? And what are they doing? These job cuts are mainly around, the ongoing job cuts are driven by a combination of continued economic uncertainty, aka they have data, and that data is pointing to a consumer that is in a weak position, that's going to have less money to spend, and they need to put themselves in a position to be able to navigate the storm. And then the second is the ascension of AI, artificial intelligence, and right-sizing companies as a result of pandemic-fueled hiring sprees. The trend reflects a broader challenge and unease shaping the job market, particularly in the white-collar sector. Now, here's what I believe. I believe that these layoffs that are replaced by AI will give these companies a massive competitive advantage. They're going to have more data, more information, and lower cost. This is going to then put further pressure on small business owners attempting to compete with these large companies that are going to be able to operate with much more flexible margins. And so that's going to put a lot more pressure on small business owners for worrying trends in tech that are fueling Google and Amazon. And also what I believe is going to happen are a lot of these tech companies are going to start having a lot of these subsidiary companies that are going to be driven primarily by AI and tech and robotics. And they're going to start to go after, certain small businesses, certain niches, all these different industries. Because if you think about what they can do, the amount of dry powder and cash that they have, if once they start moving in AI, you think they're just going to stay in their industry? You think they're going to start jumping around to all these different industries and disrupting everything? That's what I would bet on. I would bet on massive disruption eventually happening through these companies. But here's something that we all need to really understand. 40% of homes in America are owned with no mortgage at all. So free and clear, 40%. And so what I believe, many of these people, they're set. They have a retirement plan. It doesn't really matter what happens to the job market with foreclosures. Those people, doesn't matter, right? So a certain percentage of them, they own their home free and clear, but they still are going to have a hard time navigating through retirement, especially with increased insurance premiums, increased taxes, and inflation. Some of these people, they're going to be forced to sell. Some may rent out their homes. Maybe they have second homes. But look at this. Of 144 million homes, they own 57,600,000 outright. It's substantial. But 46.4% of America works or owns a small business, right? 46%. And so what I believe is going to happen is I believe it's going to be an uphill battle for many small businesses over the next 5 years. That's what I believe is going to happen. A very big battle for many industries. And when you look at what's happening here, You have homeowners insurance. They're talking about a 57% proposal in Bladen County, North Carolina. I mean, in other markets, at least the affordable housing market, in more than a generation is facing another threat: uninsurable properties, right? And it says right here that Garrett Gray sort of laughs when he tells Fortune about how his house in Los Angeles Canyon was nearly uninsurable, surrounded by brush. It's gotten really bad. CoreLogic fire score, he says, and you should know, as the president of CoreLogic's Global Insurance Solutions business, he knows the changing insurance scene is shaking up real estate. Major insurance companies may be pulling out of U.S. states with high risk of storms. I mean, like an estimated 1 in 4 Americans, about 39 million properties, are under a too large financial risk of insurance to cover them. So here's what is happening. When you have these 57 million properties, right, that are owned outright, these people, they don't really care. If insurance goes up 100%, 200%, they have the option. They could self-insure, meaning that if something happens to that property, they can come out of pocket and they can pay for it themselves, right? So they don't have to pay the monthly cost. They don't have to pay the premiums. But those that are already on a thin budget, that are a small business owner, or they work for a tech company, or they're in an area in which could be disrupted, those costs are rising. At the same time, their income is softening or falling. So what's going to happen? Well, it's going to be tough decisions for many people. But at the same time, we have to also look at what's happening. Roughly 1 in 4, this came out last year, 1 in 4 people will be 60 or older this year. 1 in 4. It's a pretty big pool considering the fact that 60% right here from ages 55 onward, which is right here, this square, all the way onward, about 60% of all homes in America are owned by this pool. So you have this situation here where many of these 3 ways seniors can tap into their home equity, came out about a month ago, CNBC. You have retirees struggling to stay afloat. Nearly half of baby boomers have no retirement savings. You have these situations that are happening. What are you going to start to see happen? I believe you're going to see a lot of retirees being pushed into making a decision. I believe you're going to see a lot of small business owners being pushed into making a decision. You're going to see a lot of people being pushed to make a decision. But the big question is, who is going to absorb those properties? When people are being pushed into that tough decision of, should I sell my home? Who is going to buy them? To buy a home, you're going to need cash, you're going to need credit, you're going to need stable income if you're getting a mortgage. And in a job market that is being shaken, a lot of people aren't going to have 2-year stable income. A lot of people won't have the down payment. And a lot of people will simply look at the numbers and opt into not buying. Because on a $420,000 home with 6% down, 30-year fixed rate mortgage, 7.5% more interest rate, this is very low home insurance, which is, $200 or $2,000 a year, right? So about $160 a month, $4,000 a month in monthly income, or monthly expense, compared to the average rental in America is $1,700. So you have to opt in to paying 60% more. Now, what I believe is going to happen is I believe many people will be forced to sell their homes, and I believe since of these 40% of homes that are owned free and clear, many of these people have a lot of cash. They're going to go out there and start buying up a lot of these distressed properties because many people think that they have a lot of equity in their home. They say, hey, my home's worth $500,000 because the neighbors, they sold their home for $500,000 6 months ago, and I believe it's worth that. But when they list their home on that open market and they ask a buyer, hey, can you afford to pay $500,000 for this property? A lot of buyers are looking at these numbers saying, you know what, $4,700 a month for that home? Nah, I'll wait a little bit. You're going to start seeing a lot more sellers being desperate, chasing the smaller pool of buyers. And so what I think is going to happen, a lot of the people that own their homes outright free and clear, they're going to go out there and start picking up deals when the numbers start to make sense. A lot of these large corporations that begin, growing and growing and growing and reducing their headcount and start to really look for ways to deploy capital, they're going to be doing it in single-family homes, infrastructure, land. They're going to put their money to work. That's what's going to happen. So this is just the beginning. When you see the lowest level of home sales in 30 years and you're looking at, foreclosures rising, what do you think is going to happen next? Do you think the economy is going to get better and everything's just going to go back to normal? Or do you think we're in the greatest wealth transfer and the greatest transfer of assets in American history? I'm leaning towards the latter. And I'm also seeing that December CPI report Jerome Powell put out saying that inflation is getting worse. I think interest rates are going to remain high and higher for longer. And I think a lot of people are going to have a hard time holding on in 2024. And it's going to push out a massive opportunity to the smart and savvy entrepreneur, investor, and business owner or employee that has stable income. That's the key here. Cash, credit, stable income. Put yourself in a really, really good spot. The last thing you want to do is rent from one of these very, very large corporations over the next couple of years. You want to own property, and you want to have assets, and you want to have a strong source of income either through your business or through your job that's going to be able to offset the rising cost of inflation. I don't think inflation is going down. I think it's only going to be getting much worse. What do you think about this entire situation? Drop below. Let's have a conversation about it. If you'd like to fix your credit to position yourself for what I believe is going to be the greatest wealth transfer in American history, we would love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session for Monday, and I'll catch you in the next one.